I'd like to introduce Mohamed or Mo El Kandri. He's the
Thank you, Craig, for this kind introduction. Hello, everyone. My name is Mohamed El Kandri. I'm the co-founder and CTO of IR4 Lab, and I have the pleasure of moderating this panel. As Craig mentioned, is timely because of what's happening around in the crypto space in terms of intensified regulatory crackdowns on the cryptocurrency landscape, whether by the US or Canadian government. And the events we have witnesses in the last couple of years, namely the collapse of FTX and other related incidents, and their consequences on the crypto space. Without any further ado, I'll be joined today by our esteemed expert speakers. Didier Lavallée, who is the Chief Executive Officer of Tetra Trust Company, Amanda Haverlock, which is the Director of Business Development at Phantom Compliance, and Dave Bradley, Chief Revenue Officer of Bitcoin Well. So Didier, Amanda, Dave, thank you for joining us today. We'll start by maybe a brief introduction of the things you are doing and the things you are working on, and your involvement in the crypto space. And I'll pass it on to Amanda. If you can introduce yourself, then move on to Dave and Didier subsequently.
Amanda Haverlock, and I'm the Director of Business Development at Phantom Compliance. We are a regulatory compliance and risk management firm that works with virtual asset service providers and payment service providers within Canada and worldwide. And one of our missions is to bridge the gap between decentralized finance and traditional finance. And I'm happy to be here. Thank you for the invite. On to you, Dave.
Thank you. I am Dave Bradley. I'm widely known as the strongest and best looking Bitcoin entrepreneur in Canada. I've been in the Bitcoin space for about 13 years now and have been working full time for a little over a decade in the space. And I've gotten my fingers into just about everything that has been going on in the space over that time. I've at least had a look at it. I'm currently the Chief Revenue Officer, as mentioned, at Bitcoin Well. Bitcoin Well is a publicly traded Bitcoin company based in Edmonton. We sell Bitcoin through our network of ATMs across the country, as well as our offices in Calgary and Edmonton. And we have a fairly new online platform that is by far the fastest and safest way to buy Bitcoin anywhere in Canada. And looking forward to the discussion today.
Thanks, Dave. So I'll go finally. My name is Didier Lavallée. I'm the CEO of Tetra Trust. Happy to be here. Thank you so much. I have about 16 years of traditional finance that I have brought to the crypto industry. Hopefully Dave doesn't hold that against me. But essentially Tetra is Canada's only qualified custodian for digital assets. So we work with institutions, CTPs, asset managers, miners, etc., to essentially provide qualified custody at home here in Canada. Our vision is to enable digital asset adoption for institutions and give them a place to store their assets safely and compliant with Canadian regulation, which is always evolving. So thank you so much for having me.
Well, thank you, Amanda, Dave, and Didier for the introduction. I'm pretty amazed by the wide range of background, and I think this will be a good advantage for the conversation going forward, having panelists from the investments, compliance, and the custody will definitely add to the conversation. I think talking about crypto, we cannot talk about it in isolation. So I would like to get your thoughts on the role of digital assets in the broader financial ecosystem, and more specifically, how will digital assets interact and potentially disrupt traditional financial system and institutions. In the past, we have seen, for example, banks going against crypto. Now we do see more and more traditional financial institutions embracing crypto or as a means of transaction or investment. So I'd like to get your thoughts on that, and maybe we can start with Dave.
Yeah, thanks. I have all kinds of thoughts on that. There's kind of two big ways that I think the digital assets are going to disrupt the current financial systems. The first one that is already happening to a certain extent that is very useful in a number of niche cases is payments. So anywhere that the traditional payment rails are not working, Bitcoin can step in and do a much better job in certain areas to serve clients that are looking for non-standard payments. So it's, we don't really need a better system to pay for a sandwich, but if you're looking to do something more complicated, then digital assets and Bitcoin in particular can be really useful. But I think the biggest way that these are going to change really the entire world is that the nature of the assets in Bitcoin, being that it is permanently scarce, creates an entirely different kind of collateral for the entire financial system. And a lot of what we've been seeing right now in the banking meltdown that is sort of slowly happening, despite the regulators' best efforts, has been companies very poorly managing the quality of the collateral that they're using for loans, as well as how the quality of that collateral changes. And we're seeing all these liquidity events and problems with banks that can't cover withdrawals. And I think that is only going to get worse as we move into a world where Bitcoin is an asset that you can't just print more of. So the solution to a lot of these banking meltdowns right now has been, let's just print more money to bail them out. But as we move towards a system of harder money that is not so easy to just print, banks will have to start moving to it, full reserves. And we're starting to see that there's a bank run by Caitlin Long in Wyoming that is proposing to go absolutely full reserve. And I think the way that a lot of the financial system works, where you've got risk on top of risk and debt on top of debt and all these different sort of cascading systemic risks, ultimately will end up changing for the better in the long term, because Bitcoin doesn't allow you to take those kind of risks. It doesn't allow you to go fractional reserve in the same way.
Thank you, Dave, for this enlightening response. And I like the relationship you made between the current banking crisis and how it's managed broadly. I think there have been some comments on that, especially in the US, but also how it's going to impact, or probably it's already impacting banks in Europe. We have seen the example of Credit Suisse and others. So happy to hear how digital assets could maybe mitigate that kind of risk. You have mentioned the idea of full reserve, and I'm fully aware of the work that Skyline is doing back in the US, and the fight against regulators to embrace that idea of full reserve. So thank you for your thoughts on that. Amanda, do you have anything to add to what Dave I've already mentioned in terms of the role of digital assets in the current financial system?
Yes, to expand on his points, one thing that we're seeing a lot today is like international remittance and cross-border remittance. So previously, you would have to have an environment where you would go through various corresponding banks to send something to, let's say, Singapore. But now that can be instantly sent over a blockchain, cutting down transaction time from like 3 or 4 days going through various banking settings to just a couple of hours. So this international remittance is totally streamlined now, and it's been proved very, very well for a lot of companies. And also on the other side about banking environments, you had mentioned this earlier, we're kind of seeing a divide. We are seeing some traditional banking accepting crypto, wanting to be involved in crypto, and gearing towards onboarding more crypto companies. But on the other side, we're seeing Project Choke Point and the presidential economic update, where they're shutting it down and they want nothing to do with it. So I think like we're on a divide between these 2 points right now, and we're going to just kind of see how it plays out moving forward. The people will tell.
Well, thank you, Amanda, for the follow-up. Didier, do you have anything to add on that?
Yeah, I mean, I would say as the resident banker of the panel, I think I would have a very strong opinions around, why the current system doesn't work and essentially why I moved to this industry. I think people would be shocked to understand how their money is stored, kept, looked after, custody, transacted, moved, etc. Right? I say this often. I don't believe the generation that follows us will bank, invest, and transact the way we've been doing it. There's just better technology nowadays to do these things. And unfortunately, the technology stacks at some of our financial organizations, whether it be in this country or globally, are completely archaic. Some of them are 50, 60, 70 years old. So if you think that system is more robust than what we have, whether it be in Bitcoin or blockchain technology overall, I think you're kind of under a rock, to be quite candid. So we are going to have some change at some point, and I don't know if it's events like we saw in the last few weeks around the banking system in the US, or something unfortunately that's going to be more dire. That's going to force change, but change will be coming. One interesting fact is when you saw the stress in the system last year in the blockchain environment, the reality is collateral management worked perfectly, right? So loans that needed to be liquidated got liquidated on time, as per the protocol, as per whatever was coded into the platform, right? So there are better ways to do things today. There is an old guard guarding the system currently, but I think it's only a matter of time before things start to change. And yeah, there's a lot of exciting stuff we could be doing to make things a lot stronger.
Absolutely, and we hope that conversations like this will put the debates front and center, and help regulators understand the dire need for change. And it's not only in the banking system, but also in the crypto industry as a whole. We have been living since the early days in this regulatory gray areas around the world, with a lack of clarity in terms of regulations in the crypto space. And we have seen incidents. In fact, the collapse of FTX and the subsequent regulatory crackdown in the US and Canada on that. The Quadriga 6 collapse in 2018, 2019. And what we are hearing right now about the problem of liquidity and the charges laid against Binance, one of the biggest, probably the biggest crypto exchange in the world. So what lessons can be learned from these incidents, whether it's in the US or Canada or globally, in terms of mitigating the risks on the crypto space? Because I think this kind of incidents impact negatively the trust and the way forward to adoption in the crypto space. Amanda, do you have any thoughts on that?
It comes down to the basics of not your keys, not your coins. It's kind of missing the mark on what cryptocurrency was developed for, especially Bitcoin, was that it's meant to be a peer-to-peer network without any of these third parties involved. It's meant to change the financial ecosystem. So when we had regulation in place for nearly a century, where securities dealers have to meet certain parameters, this wasn't really up to date when the crypto market came out. So then we see something like FTX happening. So we are seeing now that regulators are taking it seriously and wanting to make sure that people's assets in these kind of cases in custody are actually protected, which is a good thing. So I'm happy to see that this is happening on some levels, but I really hope that people will take the lesson of, if you do want to engage in cryptocurrency and be involved in it, that maybe self-custody is the best way to go for you.
Yeah, absolutely, and I think there are tools available to users. It's a good point, and it's something that comes up always when there is an incident in the crypto space. Not your keys, not your coins. So it's the keyword of Amanda. Thoughts on that? Maybe Dave, if you have anything to add on the lessons to be learned from these incidents and how we can mitigate the risk and avoid this kind of happening in the future.
Yeah, absolutely. I think that lesson of not your keys, not your coins can be extended one step further to the banks as well. And we saw a very similar situation, not really dissimilar to FTX, wherein the Silicon Valley Bank was melting down due to poor risk management policies. And there was a point there where it was unclear whether the depositors were going to get their funds. And like I mentioned before, it was convenient that the government was able to step in and print a bunch of money to bail those banks out. But that's not to say that that's going to happen every time. So I think from the perspective of a fintech company, the first thing you need to be doing is thinking about, where are your assets, whether they're in cash or in cryptocurrency of some kind, and who are you trusting those assets with? And when you trust someone with assets in the current financial system, in most of the legal structures, you're not only trusting them to hold your assets, you're trusting all of the risks that they're taking with their business. And so that's what we were seeing with Silicon Valley Bank. That's what happened with FTX was, they had all these customer funds and they were essentially gambling. And when they won, they were keeping the winnings, and they won a bunch of times, but then eventually they lost. And when they lost, there's nobody to bail them out. There's no central bank that can print more Bitcoin. And I think that's particularly relevant for fintech companies in that I think a large number, probably most fintech companies have at least like a strategy of some kind around crypto, if not being actively involved. And what a lot of those strategies is they take the form of a partnership. And so I heard a pretty credible story about a fairly large Canadian fintech company that everyone would know who had a partnership on the table with Binance, and that partnership is not looking so good right now. So when a company from Canada that doesn't necessarily have anything to do with the crypto market makes a partnership with Binance, there's a lot of very convenient features about being able to add crypto to your app and different things that you can do in different revenue streams. But when you partner with a company that is taking all these risks that you can't define, you're taking on some of those risks as well, whether it's a counterparty risk in the form of them holding your money or a reputational risk. If you're getting your customers involved in, frankly, something that may be illegal, is what we're seeing with Binance now. They've been operating as an illegal securities dealer in multiple countries for a long time. They've been doing lending illegally. They've been selling derivatives illegally. And it's just starting to look like sort of the chickens are coming home to roost on all that illegal activity. And so what I would recommend is, if you're a fintech company looking to get into Bitcoin or crypto with a partnership of some kind, go with a company that has the simplest possible business model where you can understand the risks. You don't want to get sucked into any of that lending or securities law or anything like that if that's avoidable.
Thank you, Dave. Didier, do you have anything to add on that?
Yeah, of course. Thank you. I think going back to your question, what can we learn from FTX? I mean, first of all, it was good old-fashioned fraud, right? Anybody that's going to tell us this has to do with crypto really didn't understand what happened there. Secondly, just a quick comment on self-custody. I mean, not your keys, not crypto, of course, is incredibly important, but unfortunately, a lot of institutions, that's just not realistic, right? So they have to find trusted partners to work with. And I would say, doing your homework is probably the first thing you should think about doing. We've published a lot of things at Tetra as to, what we believe custody standards are and what are the quote unquote checklists that you should be looking at, in terms of choosing your provider of choice, right? And go do your homework. I mean, you look at the FTX situation, I mean, for God's sakes, they didn't even have a board. So when you're managing billions of assets and, you're walking around and you don't even have proper governance framework, well, I don't feel that sorry for anybody that's partnered with them, right? Because again, they just didn't do their homework. So for me, it starts with, understanding, to Dave's point, who you're getting in bed with, for lack of better wording, in terms of your partnership, what they do, what's their business, what's their control, what's their governance. Are they transparent about their business model? Do they have audited financials, et cetera, et cetera, et cetera. And then, if you start getting comfortable with the part, and the odds are, you're making a good choice. If you're going around brand recognition, or because they have a stadium with their name on it, or a sports team, or an actor, or whoever you want, then, potentially you're not making a smart decision.
Or maybe they have done donations to a specific political party in the case of TX. Good thoughts, esteemed panelists. And I think this Amanda mentioned something that really caught my attention, is that the involvement of regulators into the space is a good news. I think there's always this debate between self-custody and whether regulators should step in and have greater role to play in the crypto space. And I think this debate will continue maybe in the next coming years. But in terms of expanding on that point, how can Canadian fintech companies ensure compliance, especially with such an evolving regulatory framework, without stifling innovation? And I think this comes to the point of embracing the values of blockchain and cryptocurrency as a decentralized and distributed model, but at the same time having the involvement of regulators. Amanda, any thoughts on that?
Strong internal compliance program, and make sure you're engaging with regulators. That is having the 5 pillars of compliance. Make sure you're reporting, make sure you're keeping transaction records, and that you're engaged with the regulators with what you're doing. Another point is to not deal with any ICOs, making sure that if you're engaging in the crypto space, it's with Bitcoin or some other tokens that are more well known, and not securities, because as we've seen in the Canadian market, securities are being designated to stablecoins. So that's going to have a lot of impact for remittance providers and various providers here in Canada. That is yet to be foreseen and laid out. So essentially, make sure you have a strong compliance program and make sure you're engaged with regulators. They definitely listen. Conferences, they give periods where you can put questions. For example, the Bank of Canada right now is asking for payment service provider feedback. So just make sure that you're engaged and you have a strong compliance program internally, and you'll be good to go.
Thank you. That's a good advice for any companies in Canada working in fintech or looking to get into fintech. Not only in Canada, but I was listening to earlier to Kevin O'Leary, which is a well-known Canadian investor, and he was talking about what's happening. He said regulators around the world talk to each other, and it's true. So whether you're in Canada or in the US or any other parts of the world, I think it's a good advice to take on. Thank you, Amanda, on that. From compliance experts, so we'll take your word on that. Dave, do you have anything to add in terms of your experience and how can fintech companies comply without stifling innovation?
Yeah, absolutely. So I would echo what Amanda said. The first step is that anti-money laundering compliance. You need to be compliant with FinTrack regulations. Companies like Phantom Compliance can help you with that pretty easily. And there's not a massive amount of gray area in that segment of the industry, so that part is pretty solvable. The next thing that you need to be aware of is securities regulations, which is a big problem with a massive gray area. And there are a whole bunch of, frankly, companies that have gotten away with straight up illegal securities offerings when they are selling their coins or doing an ICO or raising money, however they wanted to do it. And there's a lot of exchanges that still trade those things in a way that is technically illegal in Canada. And what I would say is that, you know, the time of being able to get away with those things in the gray area is coming to an end. So I would say that just because another company has been doing something for a while that is technically illegal, I would not recommend making that a part of your ongoing crypto strategy for fintech companies. So stay away from coins other than Bitcoin is the simple answer to that. Not everyone's going to like that answer, but that is the actual truth, is that every other coin out there is both an illegal security and really it's gambling. You know, if you want to be in the illegal gambling industry, then putting Ethereum or whatever other coins into your fintech platform is a pretty good way to do that, because it is a large illegal gambling industry and there's a lot of revenues there. And that's what draws a lot of companies in there. But if you want to stay just completely away from securities regulators, just don't deal with anything other than Bitcoin. And then the next point, which goes back a little bit to what we were talking about with the custody and the not your keys, not your coins, that's going to be the best way to handle your Bitcoin, is to hold it yourself. But that's not necessarily what everyone is going to do, and it's not necessarily the easiest thing to do right out of the gate when your users are getting into the space in the first place. And so it's important to evaluate what kind of custody you or your users are getting into. And there's a massive difference. And there's kind of 3 big points. You know, the worst kind of custody is obviously a completely unregulated custody with no guarantees, where all you have is an IOU, something like FTX, and you don't actually know what they're doing with your coins. You know, maybe they're lending them out, maybe they're lending them out to someone else who's lending them out. And it's basically impossible to really evaluate what the risks are there. And then the next step, which is more like what Tetra does, is you have companies that are dedicated to custody. And I think that's more of an ideal area to look at if you do need to get into the custody area, is pick a specialist and pick somebody who's not going to be rehypothecating your coins or taking risks with them, or using those as an income stream of any kind. Because if there's income from your coins being held somewhere, the money's coming from somewhere, and that's probably from an investment or a risk of some kind. And then the last point on that custody is get your coins in Canada. So there are a lot of companies in our space that use different US custodians as the pass-through custodian for their clients. And that means that a Canadian customer is now subject to US law, and their deposits could get sucked into a US bankruptcy case. And really, there's no control and there is no legal recourse for a Canadian other than getting into the American system on coins like that. So to summarize, keep it simple. Like, that's the single biggest thing, to not step on the landmine. Don't do too many things. Don't take too many risks.
Good point, Dave. I think to summarize, you should work with Didier, the custody expert, and I think the first regulator.
Yeah, it's probably a good idea. It's probably a good idea for everyone watching to come and buy Bitcoins from Bitcoin Well, and then hire Phantom Compliance for their compliance needs, and then store them with Tetra Trust. You know, just saying.
That's it's the right perfect mix. Didier, do you have anything to add on that, especially on the custody parts, in terms of complying and how Canadian fintech companies can comply with the regulations, if any, or in general, without stepping innovation in that field?
Yeah, I think first of all, Dave and Amanda did a really good job, and I echo their comments. I would say, Canada was lucky or unlucky to have Quadriga CX happen, right? It forced the regulators to essentially start defining a framework for CTP specifically. And I would say, Canada is probably not leading globally in terms of regulation anymore, but I would say we're also not behind, right? So I think we're probably somewhere in the middle, and I think the regulators understand that the Canadians want to essentially be involved in crypto. Depends what surveys you're looking at, but it's like 12% of Canadians, according to Bank of Canada, 1 in 3. I think the OSC is predicting, in the next little while. So, the reality is they understand the Canadian population wants this, and they are trying to evolve the framework. Now, is it quick as quick as the industry would want? The answer is no, right? Obviously, in a regulated framework, things never move as quickly as you can build the product, right? From where we sit, it's very frustrating at times to see unregulated competitors come out with products and offering that you can do, but you're just not doing because you haven't gotten that regulatory stamp yet. So there's probably a for and against argument on that front. But overall, I think Canada as a country is doing an okay job evolving the regulatory landscape, and the regulators are, spending the time trying to understand the technology, trying to understand the providers. I mean, a shameless plug here, but the argument that Dave made around having your assets in Canada is incredibly important. And I think, for anybody that's listening to this call who is using a specific platform to buy their assets, I mean, I would, just query, whether it be the help desk or whatever, and ask who the custodian is. I think they'd be surprised to know that the majority of the assets are sitting in the US. And again, in the event of a situation like we've seen, I mean, more than a handful now in the last, 12 months, those assets could quite literally disappear into the bankruptcy process, and you would have no rights over them. So, know where your assets are stored, know who your provider is working with. And, I know everybody likes to knock on regulators, but I think they're doing a great job. And, again, just to plug Phantom and Amanda, just give Amanda a call, right? They're there to help you.
spot on, Didier. Do your own research. I think this was the keyword in the early days of crypto and especially the ICO era. So do your own research. One thing that Amanda mentioned earlier is this collaborative approach, whether it's regulators or companies or innovator in the space. So in what ways can fintech companies, regulators, policymakers collaborate to create a balanced and supportive regulatory framework for the environment of the cryptocurrency and the industry to prosper in Canada? And maybe I will turn this question to you, Didier, if you have any thoughts on that.
Yeah, I think Amanda alluded to this. Like, the regulators are very open to having conversations. I think this is where it starts, right? If you're thinking about building a product, if you're thinking about, you know, evolving your platform, look at either engaging a regulator directly or engaging somebody that understands the regulatory landscape, like a Phantom, potentially, you know, legal help. I'm not going to plug anybody here, but you know, try to understand essentially how the landscape looks currently and how it's moving before you go out. They are very open to discussions. We have many examples in Canada where platforms have been operating, I would say, outside of formal regulatory framework, but still within supervision, I'm going to call it. I don't know if I could use that term. There's also sandboxes, right? So Alberta has a sandbox, OSFI has a sandbox. There's various regulatory entities that have put forward sandboxes for digital asset innovation overall, right? And, you know, there is capacity to submit business cases essentially into these sandboxes and see if we can, you know, get approval to build something, you know, within a regulatory framework or more controlled environment. So there's a lot of options here to build. Again, it's not going to move as quick as maybe Dubai or other jurisdictions right now that are a little bit like the Wild West. But I think overall, we do have a good framework to evolve both builds from a fintech perspective, but also the industry and regulation.
Well, thank you, Didier, for that. Amanda, do you have anything to add on how to create a supportive and balanced regulatory environment, whether in Canada, and how can, I mean, Didier mentioned Dubai and other jurisdictions, and I think the follow-up question would be what can we learn from other jurisdictions on the things they have worked elsewhere?
Fairly involved. We were one of the first countries to actually have large virtual currency transaction reports. So the government definitely has its eye on us. What we're seeing in other areas is the lust to be able to have an environment that doesn't have that government constraint. But in Canada, if you want to get involved in any of this industry, you need to make sure you get in touch with compliance and legal and make sure you're engaging. And I think that Canada has a strong future ahead. This is a very young industry. 2009 was the very first Bitcoin. So we have a lot to learn, and everyone involved in this ecosystem is learning at every moment. So committees, these kind of discussions, all of these types of events that everyone is having is helping Canada move forward.
Absolutely, and I think this is a good point. It's learning curve for everyone, people involved in the space, regulators, and I think there's a lot of work to be done in educating all the stakeholders, including regulators. So, Dave, do you have anything to add from your personal experience with the company? And if you have had the chance to deal with any kind of regulator, what is the best approach that has been taken on that?
Yeah, I've dealt with regulators a lot on a bunch of different levels. First and foremost, I would say that I don't necessarily agree with Didier. I think Canada actually is leading the world in regulation in our space right now. There were a bunch of jurisdictions around the world, like Singapore and Switzerland and Bermuda, Bahamas, etc., who were sort of rushing to quickly define some sort of digital asset framework for regulation on what should be considered a security and what should be considered a utility token. And I think they broadly missed the mark on those determinations, in that they didn't really know where the investor protection issues were coming from. And a lot of the projects that went to those jurisdictions to launch and essentially offer what would be an illegal securities offering in North America, basically different ways to raise money without disclosures and all the disclosures that we're used to in the public markets and traditional financial systems. And a lot of those projects have ended up being scams. You know, they've fallen apart, and I think Canada has taken a little bit better approach. And part of the reason for that is, like DJ mentioned, the collapse of Quadriga and other exchanges that we've had. And so, I think we're seeing that in the US right now, where you had SBF and FTX, the big money donors. They were the second largest donor to the Democratic Party. They also gave a lot of money to the Republican Party. And I think a lot of those politicians have egg on their face in that they got this guy who may have been the largest scam artist in the history of the world, now just gave them some money, and they don't want to give it back. So you've got this pendulum swing where they were very permissive because they were being paid to be permissive, and now they're going back the opposite direction, and they feel like they have to crack down on the space in order to get away from those allegations of bribery, essentially. And we had that happen in Canada, but I think our regulators, because they weren't coming from such an extreme case, there wasn't a political scandal potentially backing the moves of the regulators. They took a little bit more thoughtful approach, and they've addressed some of the very specific issues like custody, as we've talked about, in so much as a company in Canada who wants to custody Bitcoins or other cryptocurrency for your users, you have to be registered with the Securities Commission. They've determined that relationship of custody represents an investment contract. And I think the benefits for consumer protection from that decision have been quite significant. And we haven't seen an exchange meltdown since then. And that's very telling. And part of the reason for that is because so many of the platforms in Canada have had to go through the due diligence with the Securities Commission and show that they are not the next FTX, and it's like DJ mentioned, it's very common that people have just not done the due diligence on these companies. And it's easy to figure out, like when you're talking about one of the biggest companies in the space that's worth $20 billion, and they don't have a board or a CFO, you don't have to look very deep to find some problems there. And so I think the path that the regulators have taken us in Canada has been pretty reasonable. It's not always easy, and it can be frustrating at times, but the consumer protection that they've added has been meaningful. What I would ask and what I would recommend of fintech companies looking to get into the space in some capacity is don't make it worse. Like, we had a lot of trust to build back up with the regulators from the collapse of Quadriga and Einstein Exchange, and there was really the space was a mess comparatively back then. And we're just getting to the point where the good players in the space are now starting to build back a little social capital with the regulators. So I would say that the time when you could do something that is technically illegal and get away with it and ask for forgiveness later, I think that time has passed. I think that if you're going to be operating in our space, you need to either be fully registered whenever required with both FINTRAC and the securities regulators, or partner with a company that is. And the days of there being a whole bunch of gray area in the crypto space are fading. And I think we all need to sort of start moving in that direction as an industry to really just get all the shady shit out of our industry. And there's still a lot left. We've gotten rid of a lot of it, but I think to my previous point, there will come a day when Ethereum is the entity that is now under scrutiny from the regulators and the financial crime investigators of the world. I think we're going to see in the next couple of years some very, very major cryptocurrencies come under fire from regulators, not just regulators, but law enforcement. I think there's a lot of criminal activity happening in some of these coins.
Dave, I couldn't agree more. And I think reaching out to regulators, by reaching out to the regulators of a fintech company, I think you will do yourself a favor, but you will do also in the industry a favor as a whole. I think this notion of trust is very important. and this is the whole point of blockchain. I think we do have 3 or 4 extra minutes. I will move on maybe to the audience to see if we have any question. We do have a question here. It's with regard to the merger of WonderFi, CoinSquare, and CoinSmart. So the question is, how will the merger of WonderFi, CoinSquare, CoinSmart impact Canada in the world of crypto? And this question is from the audience. I see Dave laughing, so I think yeah, there's some thoughts on that.
So I know everyone involved there reasonably well. They're good companies that will probably benefit from being combined. What I want to avoid seeing is that we end up creating a scenario where the barrier to entry for new companies is too great. So we're inevitably going to see a lot of consolidation, and we have seen a bunch of that already. We've acquired, I think, 9 different companies in the last 3 years. So they're not alone in that goal of sort of consolidating the industry and getting rid of some of the inefficiencies. But yeah, I'm hoping that what we eventually end up with from a regulatory framework and like an operational capacity within that regulatory framework doesn't end up being too burdensome, so that only very large players like what we have now with the WonderFi CoinSquare deal can operate in that industry. And I hope that 5 years from now, it's still easy to start a company selling Bitcoin.
Amanda, maybe in less than a minute or so, do you have anything to add on that, on the merger of CoinSquare, CoinSmart, and WonderFi and the impacts on the crypto industry?
I really don't have much to add. I definitely share Dave's sentiment, and I want to make sure that we create an environment where small businesses dealing in Bitcoin can definitely grow in Canada. And that's just my one concern with that. So Didier, did you have anything that you'd like to say on it?
Yeah, I mean, the one thing I would say is to me, this is a kind of a move to defend against international players coming into Canada. And I would say for anybody listening to this conference, I mean, use the Canadian platforms to buy your Bitcoin. I mean, the statistics is 3 out of 4 Canadians are buying their Bitcoin externally. So with an international platform. So we're talking about supporting the ecosystem, you know, supporting the players. You're seeing these mergers because these companies have to defend against who's coming in. And if we want to support the ecosystem, then start by engaging with local players.
I think it's a good way to end this panel. I have been thoroughly enjoying the conversation with Amanda, Dave, and Didier, and I'm pretty sure that the audience had the same joy in joining this conversation. And I would like to thank again the National Crowdfunding Association of Canada for giving us this opportunity and this platform to discuss such a timely and important topic for the Canadian crypto space and crypto space globally. So I'll turn it on maybe to Craig for the rest of